Aspen Pharmacare expects headline earnings per share to be between 17% and 23% higher. Earnings per share are seen at 24% to 34% higher. The growth in earnings per share has benefited from the disposal of the discontinued businesses and products. Aspen's interim results are scheduled to be published on the 7th of March. Let me begin with you, Jean Pierre. Would you buy the Aspen results ahead of the fact?
I think this was a positive trading statement and probably slightly ahead of expectations. So on a short-term basis, it would seem like if you exceed expectations, that's a reason to buy a share.
Sure.
And over the longer term, I see very good prospects for Aspen. So yes, I would be a buyer.
Craig, when you look into these stocks, what would you be buying in terms of the growth story here?
Look, what's nice about Aspen is it operates in 100 countries. So you're not looking at something that's a wholly South African operation. They've just also acquired Sigma earlier last year in Australia. They've got 4 manufacturing plants in Australia. It's a very well diversified manufacturing plant in Germany, etc., etc. So I'm buying the global story. There's a lot of global patents that are coming due for renewal because Aspen is quite a big generic. In fact, it's one of the top 20 worldwide generic players and certainly the biggest in South Africa. It can benefit from those patents now coming free. And so I buy that part of the story. There are some concerns locally, concerns about what the government's going to do with the 1.6 billion ARV plant, etc., how it's going to affect Aspen. But internationally, I think there's a lot of opportunities, and that's what I'd buy on the story. So
operationally, I know you guys would have looked at different reports from analysts that look at the stock. What would you have said would have driven earnings higher here, 17 to 23%? I'm beginning with you, Craig.
I think it would be the good costs between the synergies of Sigma, that would be part of it. But that 23% is not far off from what the company's delivered in the past. I think in the years to June, they got 25% growth in profits there as well. So it's a really well-run company. Stephen Sard and his team do well. And I think it's much more of the same that we're going to see going forward as we've seen in the past. It's a really nice defensive story and well managed.
Yeah, Jean-Pierre, Craig raises the issue of the government potentially looking at the setting up of an ARV plant here in South Africa. How big would that threat would that be to Aspen, particularly given the space that they play in the generic drug side of it?
Well, as far as I know, it's an API plant, which is the active pharmaceutical ingredient which goes into the manufacturing of ARVs. And even though it's the majority of the cost of an ARV, it's still an input into another manufacturing process of actually manufacturing the ARV drug itself.
Right.
So if that is the case, it could actually be good for Aspen if it helps them in terms of when the rand is weak and they used to import APIs rather than buy it locally from a local factory.
Right.
It would probably assist them in that regard, and it would also assist government because the price would be lower because of a lesser imported component, meaning that government can save a good chunk of money on the purchase of ARVs.
Yeah, we're looking, of course, at the stock today. This stock traded up 1.5% after that trading update. So the market not really jumping onto this stock here based on the trading update.
Yes, only slightly above expectations. And I think if I had to speculate what we'll see in the full result, most of this growth probably came from the international operations, assisted by weakening of the rand. In the local operations, Aspen lost the baby milk formula licensing, so they couldn't sell baby milk from Pfizer anymore. They had their own brand in the market, and that did gain traction, but they needed to fill that hole of previous sales. Secondly, the take-up of ARVs was slower than what the tender amounts were when government announced the results of the tender, because there was still a lot of stock from donor organizations that government could use first. And then thirdly, we saw a 0% SEP increase for most of last year and only a 2% SEP increase announced in January.
Right.
So they couldn't increase the selling prices of their scheduled medicines.
Right.
So taking all of that,
that's the government-controlled price.
Exactly, yes. So taking all of that, I think some headwinds in South Africa. It could be a weak result from Aspen, from their South African operations, but a very good performance internationally.
On a dividend yield, and these are historical numbers of 1% and price to earnings ratio 20.9%, would you be touching this? Hot or not for you?
It's almost the same story as the previous two stocks. Long term, it's hot, it's got an entrepreneurial management team, it's expanding internationally, it's a great story, but the price is quite high.
Jean-Pierre, then long term, shouldn't all stocks be hot?
Good stocks, yes. Good companies, correct. So that's the tough bit. Is in the short term, sometimes they fluctuate quite widely away from where they should be trading.
Okay, Craig Martin, for you, Aspen.
Yeah, I think Aspen's always something that one should consider as a key component to your portfolio. It holds a slightly defensive element to it, and so I'm going to say hot as well on the long term. There's no rush to get into it at the moment, but certainly I like the company.